Hi everyone and welcome to 2020. This is Shakira Lanawaji, your tax resolution CPA. So today we're going to be talking about being proactive about your tax planning. People, I know that it's very cliche, this saying that if you fail to plan, you're planning to fail. When it comes to taxes, this is 200% accurate. I can't even stress it enough. If you fail to plan when it comes to your taxes, you're just digging your hole. You're paying the maximum you should be paying in taxes. So 91 of the Fortune 500 of the Fortune 500 companies, 91 of them do not pay anything in taxes. When I say they don't pay anything in federal income taxes, they pay zero in federal income taxes. Do you know why? Because they take very good care of their tax planning. Now, if Amazon and companies like that are paying 0% in their taxes and federal income taxes, why are you paying the maximum amount of taxes you should be paying? Why? Do you just throw money away and give your money away to the government? You should pay your fair share, but the tax law allows you to pay the minimum, and if possible, zero, if you just look at your taxes from the front view mirror instead of from the rear view mirror. The wealthy people in this country, they decide how much they're going to pay in taxes, if they will be paying anything at all, in January, from the beginning of the year. They make sure they meet with their CPA and have that conversation and work towards making sure their liability is the least possible for the whole year. They work to make sure that liability is low. So if you're not being proactive about your tax planning, you're only setting yourself up to pay the maximum amount you should pay or you're supposed to pay in taxes. Let me give you 5 tips. 5 tips to make sure you're being proactive. Number 1, go and see a CPA in January of every year. And if you want to do it every 2 years, that's fine. If you're a W-2 earner, it's very important, especially for W-2 earners, because there's not too much wiggle room there, but there's stuff you could do, right? So the first thing is make sure that you see a CPA, not just a random CPA that does everything, I work with people who specialize at what they do. Look for a CPA who their specialty is tax planning. Tax planning is key. Now, if you're a small business, look for a CPA who specializes in tax planning in your industry, because they know the tax loopholes, they know the tax strategies for that specific industry. That's the first thing. The second thing is, as a W-2 earner, you should be maximizing your retirement income. Your 401k, maximize it. This year in 2020, they're giving $19,500 allowance for you to be able to put towards your retirement. That $19,500 does not get taxed. If you're over 50, they give you an additional $6,500, right? So you need to make sure you're maximizing, because that's the way you're reducing the amount that you get taxed. And if you're even lucky, some companies allow you to contribute or to participate in their kind of like your manager level 401k plans. They add you to a pension program that allows you even do up to $55,000 or more. So it just depends. Make sure you're maximizing your retirement savings if you're a W-2 earner. Another thing for W-2 earners is use the health savings accounts. These are also before tax income. These are before tax. So if you do a health savings account with your employer, that money, the maximum this year for single people is $3,500. And that's for single people. For a family, it's $7,100. That's an additional $7,100 that you get to not pay taxes on. You need to know this ahead of time so you make the right selections, right? When you're doing your benefit planning for work, right? So that's number 3, right? I told you number 1, make sure you meet with a CPA that is very good with tax planning. Focuses on tax planning for your industry or for your tax situation. Number 2, if you're a W-2 earner, maximize your retirement income. Number 3, if you're a W-2 earner, make sure you maximize the health savings account. Number 4, if you're a business owner, a small business owner, you want to make sure you're using the right business entity for yourself. If you're a sole proprietor, like I've said before, and you're doing a Schedule C filing, you have a higher chance of being audited than a corporation. That's one thing. The second thing is, you're probably paying an additional 15.3% in taxes that you might be saving on, depending on what your tax situation is. So that's number 4. Make sure you have the right legal entity, the right business entity. That could cost you a lot of money if you're in the wrong entity, okay? Number 5, This is the fifth tip. If you are a small business owner or even a W-2 earner, make sure you are paying your estimated taxes. Make sure you're paying your estimated taxes or your federal withholdings are accurate. If you're a W-2 earner and your federal withholdings, you're claiming a 3 instead of you claiming a 1 when you fill your is it the W-9 or W-4 for the year? Make sure that is accurate. You do not want to find yourself being short at the end of the year, and then if you're short, you're paying additional penalties. In case of a business, if you're not paying your estimated taxes or your federal withholdings are not being deposited on time, as a small business that does payroll, you are going to be drowning in penalties. IRS penalties are no joke. You do not want those, okay? So those are 5 things you could do to be proactive. The most important one, talk to a CPA that is very, very well versed in tax planning. You need to talk to a CPA that knows what they're doing. Somebody who is very specific to your industry or your situation. Do interviews for like 3 to 5 CPAs in January. Decide which one is going to work best for you. Listen to their strategies. It is worth every dime, I promise you. Okay, it is worth every dime. It is very important to do tax planning because this is how you're not looking at things from the rearview mirror. You're getting ahead of it. And this is how you save money. This is how 91 of the Fortune 500 companies are not paying taxes because they're doing proactive tax planning. So I hope this was helpful. Share, like, comment, and I look forward to having a successful 2020 with y'all. And also, I look forward to speaking to you next week. Bye.